for that double bottom. As I mentioned earlier, you always want to have rules for each chart pattern that you're going to be trading. My rule for these is that I make a box from the lowest body of the swing low to the lowest low of the swing low. We'll do that with horizontal lines to make it easier to see. So that would look like this right here. This would be the zone that I want price to test but not close below. What does that mean? That means that price can come down with candles and I can see a wick come into this zone. I can even see a body close right here in this zone. I can see a wick come past this zone. All of that would be a valid double bottom for me, but what I cannot see is price come down and then a candle close below this zone. And the logic behind this is that a close below a previous low, like we have right here, indicates further down pressure and indicates that we could be seeing a continuation of this downtrend that we have. So I want market to stop before this low, but I want it to at least test the lowest body of this swing low. So this is what that looks like with real candles. If I click forward a bit, you'll see that we now have a test of our first bottom, giving us a double bottom, but we don't have any candles that are closing below our wick. So the market's showing us rejection from our first bottom by doing this. And with that being the case, and us seeing rejection from that, this would already qualify as a double bottom for me. Now, I do not trade just because I see a double bottom. We're going to get into entries and a lot of other factors that we add to these types of chart patterns a little bit later in the video. But right now, I want to go through all the rules that I have for double bottoms, double tops, head and shoulder patterns, and inverse head and shoulder patterns. A question I get asked a lot on double bottoms is how many candles do I need to see right here in the middle? I don't necessarily have a rule for this, but if you wanted to create a rule, you could say that you need to see between 5 and let's say 25 candles between your first bottom and your second bottom. That's just a way to give you an objective rule. That's not what I use. I don't really have a rule for that. I just want to make sure this looks like an upside down V when I'm looking for chart patterns. And I know that's subjective, but I've been doing this for a really long time and I don't really need a rule for that personally. Again, if you do, use 5 to 25 candles in between for your double bottoms. Now, as we can see, this double bottom did happen and played out really nicely. Again, we'll go over entry, stops, and targets a little bit later on in the video. Right now, I want to go over double tops. So now that we've looked at a double bottom, let's find a double top and do the same thing.
Three steps to making a trade. Number 1, macro. Be ready for any market event with eToro's economic calendar. Number 2, micro. Apply advanced analysis tools with TradingView charts. Number 3, decision. Seize the opportunity with one-click trading. Trade smarter with Pro Tools. Download eToro now.
And ironically, really close by, we have a good example of a double top. So this is what we're looking at for a double top right here. And what I'm going to do is the same thing I did with double bottoms. We're getting into market replay mode, and I'm going to show you what I would do after the first pullback. At this point, what does it look like? It looks like we're in the middle of what? A pullback. We have a push higher, pullback, push higher, pullback. At this point, the only way for us to define a double top is to wait for price to get to our area. Go ahead and see if you can assume or guess where my area is going to be. My area is going to be from the top of the bodies of the swing high to the very high of the wick of the swing high. And that looks like this. Top of the bodies, top of the wick. We now have a zone where I want to see price touch and test and be rejected from. So in this case, what I can see is the market can move up and I can have just a wick come into this zone. I can have a body of a candle close in this zone. I can even have wicks that go up past the zone. All of that is valid for a double bottom for me. Excuse me, a double top for me. What I don't want to see is trend continuation. I don't want the market coming up here and then creating a candle that closes above this high of the double top for the same reason as we didn't want something, or a candle, excuse me, closing below the first low of the double bottom. This insinuates trend continuation to the upside. I'm not going to be trying to trade a double top to the downside when I have a close above candle. So those are my rules for a double top. Again, if you need rules for in between, use 5 to 25. And let's see how this played out. If we click play, do we have a valid double top right now? Yes, we do. Why is that the case? Well, we have the market rejecting this area by not closing above our previous high. So with that being the case, we have a valid double top. Now, this specific trade took a while, a little bit of consolidation here before it actually pushed lower, but this double top did push the market lower eventually in a dramatic way. So that is my rules for a double top and a double bottom. If you want a more detailed version of that, since I kind of sped through it for this video, the reason I did that is because I have a full length video just going over double tops and bottoms that will give you everything you need to understand these two patterns. And that'll be right up here in the top right hand corner of the screen. You'll see a little card pop up right now. So with that being the case, and now that you know my rules for double bottoms and double tops, let's move on and talk about my rules for head and shoulder patterns and inverse head and shoulder patterns. After that, we're going to be talking about and building out a full strategy by adding other technical factors to these patterns in order to make them strategies we can stay consistent to and that can make us money over time. All right, so what we have here is a valid head and shoulders pattern according to my rules. This may not look like a perfect head and shoulders pattern, and that's on purpose. I'm not here to show you absolutely perfect examples. I want to show you real-time examples that you can actually take and apply to real markets. And this is a real-time example of a head and shoulders pattern that meets all of my rules. Let's talk about why doing the same exact thing that we did last time by placing the market in market replay mode, which makes it really easy for me to teach. So at this point, what do we have? We have a market pushing up, pushing down, pushing back up. What we call this is our right shoulder and the head of our pattern. The rules for this is we need a break and close below and a higher high, excuse me, I said below, a break and close above and a higher high than our previous high in order to count this as the head of the pattern. Once we have the head of the pattern, the next thing I wait for, this is my first rule after getting the head of the pattern, is I wait for the market to come down and retest the first shoulder. So if we're drawing this out as a trend, we would see the market pushing up to a high, pulling back to our shoulder, and pushing up to a new high. This pullback to our shoulder, I put a horizontal line on the lowest bodies of that pullback. What I want to see, and also on the lowest low of that pullback. What I want to see is similar to the double top and double bottom thing. I want to see the market come down and test this area. I do not want to see a candle close below it. What I want to see is that the market has come down and tested this area with either a wick or a body can close in it and a wick can go past it. The only thing I can't see is a body closing below this area. So anything else is fine as long as we test and reject this area to the upside. So let's see what price does as I click play. Right there, we have a test of this area with this candle wick right here. So right now, my rule number 1 is met, which is a test of the bottom of the previous shoulder. So that would be this zone right here, which did get tested right here. My next rules are that, since we already have that one done, and I'll just leave that here in case I need to do another example. My next rules are that I want to see price come up at least to the right shoulder, but price cannot touch the head of the pattern. Let me make these a little bit bigger. It might be difficult to see. There and there is my termination point for my second rule. What this means is I want to see price push up and at least test this shoulder. And as long as price does not push up all the way to our head of the pattern and touch it, I don't want to see the market touch that head of the pattern whatsoever. If it does, it's an invalid trade, turns into more of a double top than a head and shoulder pattern. So what I'm waiting for is this area to be my termination zone. And again, this area is between the bodies of the candles, the highest bodies of my right shoulder and the highest bodies of the head of the pattern. That is the termination zone for what is considered our left shoulder. So at this point, we know we can see price, or we must see price at least touch 129.57 because that's the highest bodies of our right shoulder. We know that price cannot touch the highest bodies of the head of our pattern. As long as that happens and we see a push lower, we have a valid head and shoulders pattern. Let's see what price does. Eventually we push down and we break through the neckline. And I do need a break through the neckline zone in order to classify this as a valid head and shoulder pattern. Now, let's go through that really quickly one more time to make sure you understand it. We need the creation of a right shoulder. We need price to break above that right shoulder. We then need the creation of the head, which just means we need to start seeing a pullback. The initial thing we're looking for with that pullback is that it comes down and tests the bottom of our right shoulder. We want it to at least test the bodies of that swing low, but we do not want to see price close below the low of that swing low. As long as we get that, as we do here, and the market starts pushing higher, we now have another zone to pay attention to between the highest bodies of our right shoulder and the highest bodies of the head of our head and shoulders pattern. This is the termination zone for our left shoulder, which is this right here. As long as we have the market pushing down, following rule number 1, pushing back up, not touching the head of our pattern, and at least testing the right shoulder, then we have a valid head and shoulders pattern as long as we break through this neckline zone with a candle. In this case, we did, and the market continued lower, which of course will not always happen, but in this specific situation, it did. So those are the rules for my head and shoulders pattern. I know that was a long one, but we're going to dissect the rules for an inverse head and shoulders. We're going to go over that a little bit more quickly since you now kind of comprehend the way these rules work. So let's take a look at an inverse head and shoulders pattern. Then we'll dive into a complete strategy using these chart patterns combined with other technical factors to create a money-making trading strategy.
Gear up for an epic experience and win big. Just grab a Coke and scan the QR code. It's your chance to win a trip to the ICC Cricket World Cup in India or thousands of prizes from McDonald's and Kareem. Drink, scan, win with Coca-Cola.
An inverse head and shoulders pattern is just a head and shoulders pattern flipped upside down and looks a little bit like this. This is the one we're going to be taking a look at as an example, and just with every other pattern, I'm going to go ahead and put on market replay mode to ensure that I can teach this in the best way possible as if you were actually looking at it on a real chart. So if we're looking at this on a real chart and analyzing it, we can see that we have a push down to a shoulder, which is actually right here. The reason I just did that, let me explain that to make it easier as well. Here we have a low, but here, let me draw it out, we have a lower low. With that being the case, this is what our pattern would look like. It would go to there since that's the lower low. Then we have our first shoulder pushing up to this high right here. We then need what in order to classify ahead? We need the market to break through this low. Since we did break and close below and create a new low down here, we now have a left shoulder and a head. What are we looking for at this point? What would you expect us to be looking for based on what you know about the regular head and shoulders pattern we just looked up? Well, we want to see the market test this area. Let me make these black. That might be hard to see with everything being blue. So we want to see the market test this area right here. Why? Because this is the area between the bodies of this pullback and the wick of this pullback. With that being the case, this is the area we want price to test. How do we want it to test this area? We want price to push up and at least touch this area with a wick. We can see a body close in this area. We can see a wick go above it. What we do not want to see is price push up higher and end up creating a higher high right here in price compared to the previous high over here. So let's press play and see what happens.